We're going to be talking about the 4 different types of income, and the 4th one is the one you want to be in. Hey, I'm Dave from Investor Mel and Dave, and if you're new to the channel, make sure to subscribe and hit the bell to get notified because we release a video every single week. Now, why should you listen to me? Mel and I have now purchased over 260 units in 5 different countries: Canada, US, Costa Rica, Mexico, and Dominican Republic. And we are the proud founders of the Action Family Mentoring Program. It has over 2,200 members. We show people how to do exactly what we do: buying real estate, other people's money, creative financing, and no joint venture partners. But enough about me, let's dive in. Okay, so the 4 different types of income that we're going to be chatting about today. Let's start with number 1. So T4 if you're Canadian, or W2 if you're in the US. So that is number 1, okay? And that's basically trading your time for money, right? You go in, you have an employer, you trade your time for money, you have a set hourly rate, you have a set annual amount that you make, you get a set 2 weeks vacation or whatever you've negotiated, 3 weeks, some people have different things, but that's literally what it is. You trade your time for money, and you don't really have control of how much you make, unless there's overtime. And when I was a firefighter, I could take overtime, right? Or I could do different things. But when I actually worked for the provincial government in Ontario here, where I live, Mel and I live in North Bay, Ontario, Canada, I could not just get overtime. I had a fixed annual T4. I worked 40 hours a week, and it is what it is, right? You raise once a year for the first couple of years, but that is a type of income where you literally trade your time for money. Okay, so that is number 1. I won't spend much time because everyone knows about this one. This is what the majority of people do. Number 2, okay, is 1099, or I'll just put SE, okay, self-employed. Okay, and this could be something, so 1099 is in the US, right? That's self-employed, and in Canada we just call it self-employed. So this is literally where you might, I don't know, it's kind of like a business, but you don't necessarily have other employees. So if you're a plumber and you're the only plumber as part of your company, and you go and you run your business that way, or you are an electrician and you go and whatever, wire houses and things like that. It's basically, you are it, right? You are the person that does everything, and you are the business, literally, okay? Now the issue, which is fine, a lot of people do that, sole proprietorship, self-employed, 1099, same thing. There's nothing wrong with this, okay? There's nothing wrong with any of the incomes. But what I'm getting at here is, if you're it, when you are not doing the thing that you make money at, you are not making money. Okay, and this, like, I have a lot of plumbers and electricians and tradespeople that come to me because we show people how to do this, and they're like, Dave, yeah, I have the flexibility. I can call in sick whenever I want, or I can go on a vacation whenever I want. But when I do that, there's no money coming in because I am the thing, right? I am the person that needs to go do whatever service I provide, okay? So it's not necessarily... it's not reoccurring income as well. Same with this, right? It's not reoccurring income. You have to go and give your time, right? You got to go and literally trade your time for the money. Same with this. You got to go and do the thing that you provide to get that income. Okay, so these are the downfalls. So this one has a little bit more flexibility, but then again, this one will have vacation where you get paid no matter what during that vacation. This one won't. So it's a little bit of a trade-off. This one's not as flexible, but you get paid when you're off, depending on what you've negotiated. This one, a lot more flexible, but you don't get paid when you're off, okay? Now the next one is a business. All right, business. So it's kind of like this. So let's say, for example, you are I'll just use a plumber. For some reason, I'm loving plumbing today. Let's say you're a plumber, but now instead of just being you, the 1099 or the self-employed, you now have, plus 2 other plumbers, let's say, okay? So now it's a business, because now, again, the difference between this and this is, let's say you do go on holidays, right? You take your family to Florida or Costa Rica or Mexico or whatever it is, and you do decide to go on holidays. Well, those 2 other employees are still working, so you're still making money as you're vacationing and as you're doing your thing. So it's kind of the same thing as this. It's just now you're responsible for 2 other people, which also comes with different headaches. Not going to lie, right? Mel and I have had teams over the years. We have an amazing team. Like, I cannot stress, we have an amazing team. Most of them are virtual, right? Most of them are Mexico, Philippines, Brazil, Portugal. I'm trying to think where else. I'm missing some countries here. But yeah, our team is mostly virtual. We have some in our city. We have some in Canada. Oh, the US as well. It doesn't matter. But what I'm getting at here is this is a whole other element. Now you have employees. Now you're helping provide for other people that are not necessarily just your family, right? You have to keep jobs coming in for those employees. You have to keep work coming in. You have to pay them. You have to make sure that everything is up and up. So businesses can come with a whole other stress that this one might not come with. So again, everything's a trade-off. You're still working for yourself. You have people that work for you, so the money still comes in when you continue to go. You do have to have oversight, right? Your team only runs as good as you manage them. Okay, so you need to manage your team, which again can be cumbersome sometimes, right? But again, so it's a little different than this, right? So let's look at all 3 so far. This one has the most flexibility, but comes with the most responsibility, right? Because it's not just you anymore, there's other people. This one has somewhat of the same flexibility, but again, you don't earn when you're gone. This one has the least flexibility, but has the most stability. Your employer provides you the work, right? You don't have to go looking for it like here. So they all have their pros and cons, which is very, very interesting. And I've been this, Mel and I have been this, right? I was a firefighter. She worked at our local college. Then we did this, right? We had a property management company that Mel and I did everything. We managed all our own units at one point, okay? We've done this, we still do this. Mel and I have multiple active businesses where we have employees, and it's, like I said, we have the best team in the world, I love them. Where we have active employees and all that. Now the 4th one, this is by far my favorite. Okay, and this is what typically you'll see millionaires and rich people, this is the type of income they have. And it is portfolio income. Okay, this one is the game changer. And what do we do for portfolio income? I have terrible writing, by the way. Real estate. It's funny because I'm trying to teach my kid, Colton, he's 10, I'm trying to teach him how to write and all that in cursive. Meanwhile, I can't even write. But anyway, real estate. So portfolio income is the most powerful in my opinion. Why? Why is having a real estate portfolio the most powerful type of income in my opinion, especially out of these 4 right here? So let's go through. What does this look like? You own income producing assets, whether it's a long-term rental, okay? So I'll just take some of my deals. So Mel and I, we invest in Ontario and in Alberta in Canada. And in the States, we invest in Texas, Florida, Ohio, okay? And the majority of our real estate in those 5 places, right? In those 2 provinces and 3 states, long-term multifamily buildings. Okay, let me say that again. Long-term rentals and multifamily buildings. Now, do we have other types of real estate? Absolutely, right? So let's talk about Costa Rica, Mexico, and Dominican Republic. Those are short-term rentals, okay? Some of them are condos, some of them are penthouses, some of them are villas, right? Casa and villas. A villa is basically a townhouse, and a casa is a house. Just a little lesson for you there. So portfolio real estate is owning income producing assets. Okay, now what is the game changer here? You do not need to be there, right? Like I said before, I live in North Bay, Ontario, Canada. I invest in 5 countries. Mel and I have never been to Texas. We have never been to Ohio. We own real estate in those places. We purchased in Edmonton, Alberta before ever going there, right? We went last summer, which was awesome. We purchased in Costa Rica before ever going there. Now we've been multiple times. Costa Rica is beautiful. We love it. So again, it's just, you can build a portfolio of real estate without having to be there. The other thing too, like this one, you've got to manage it actively. This one, you're it. And this one, you've got to show up every day, right? This one, what do we do with our portfolio? We hire property managers, okay? So now we still have to manage the managers. I'm not going to lie and tell you that, you do absolutely nothing. But you're managing the managers, which is totally different. So for example, which one do I want to use? Let's use Ohio. So I have a property management company, and that person is running this, and they have employees. Let's say someone calls in sick. Let's say someone quits or they fire or whatever happens. It doesn't affect me over here because I call the property manager, and it's like the tenants call them. Everything is through them. That is their responsibility. My portfolio in Ohio continues to be managed. Okay, so that's the game changers. You don't necessarily have to be the employer. You have to find employees. You have to do the thing. No. Portfolio income is sit back to a certain extent and manage the managers. And it's up to them to run their business and provide you the service, right? And provide the tenants the service as well. The other beautiful thing about portfolio income is you don't have to show up. Like think about this. Mel and I, we own real estate in 5 countries. What do we have to show up for? Nothing. Like there's no job to show up to. I get my monthly reports on my laptop, whether I'm in Florida, going to Orlando with the family, whether I'm in Costa Rica staying in one of our places. Like it doesn't matter. You see what I'm saying here is the portfolio income. It doesn't matter. There's nothing to show up. There's nothing to necessarily have to do. Let me backtrack. I don't want to make it sound all rosy here. Yes, you still manage the managers. I've said that multiple times here. You still got to make sure things get done. So the property managers in different areas, they might take care of the utilities, they might not. You might need the bank has questions, that's up to you, right? You'll get the numbers from the PM, but it's still up to you to get the refinance, to get the financing. But that's the heaviest lifting you really do in portfolio income. So now let's compare, okay? Because I want, and put in the comments below, which one are you at right now? Which one do you want to be at one day? And which one, rank them from the best to the worst in your opinion, okay? So in my opinion, because I've done every single one of them, right? And I'm still actively in these 2 here. In my opinion, obviously this one's the best, right? Like I would probably give this one the best, okay? And I want to see if you agree with me or not. I would give this one a number 1. For all the reasons that I just mentioned, I don't want to say it again, I don't want to bore you here. This one would definitely be my number 1. This one would probably be my number 2. Because again, as much as having a team and all that is a responsibility, this one gives us the most flexibility, okay? So for example, I also have my real estate license and I have a team, okay? I have a group that we do. So when I go away, the group is still doing their thing. I manage them to a certain extent. They're pretty self-sufficient, but I still make money even though I'm not there, right? With my real estate license. So that's I'm just using one of our businesses. So yeah, not as passive as this one, but still pretty active and self-sustained. And I still make money when I leave too. So that one's nice. I'm kind of torn between these 2. And let me tell you why. So clear 1, clear 2, right? Hopefully you agree, well, it's up to you. Agree or disagree. Clear 1, clear 2. Between these 2, I'm trying to think which one I would pick. And I'll just use my personal examples as well. So when I was a firefighter, again, it was nice because I would show up, I would get overtime, I would do my thing. I didn't have to think about, overly where to get work and all that. But then I did work on Christmas. I did work on my birthday and other people's birthdays and on holidays. So I couldn't really control my schedule. And I basically when I was there, I had to do what my employer said. You know what I mean? So I don't know. So I'm kind of torn on this one. This one as well, like when Mel and I had property management companies. Again, it's up to you to find the next client, to make sure that things are happening, right? So you're kind of always on when you have a business like that. You can never really delegate. So it's kind of a tough one. But if I absolutely had to pick, I probably would say, which one do you think I'm going to do? Which one's getting the 3? This one or this one? I'm probably giving this one a 3, and I'm probably giving this one a 4. Just my opinion from the jobs and everything that I've done, right? From working at the government, being a firefighter, from having our own businesses where Mel and I were basically it, and then from having multiple active businesses now. And again, by far, this is the one. The real estate piece, the portfolio income. So the cool thing, actually, let's talk about how you draw money from this. So people ask me all the time, Dave, Key, you own real estate. How are you actually getting money? Okay, how are you actually receiving funds from this? So the money comes, like let's say Mel and I are over here, right? That's me, whatever, and this is Mel with some hair. I don't have any hair. How does that money get to us, right? This is us personally. And let's say these are all corporations and LLCs, depending if you're talking Canada, the US. How does it get to us? How do we actually get portfolio income? Because this one's easy, right? You get yourself a paycheck, right? That's a paycheck. This one, people pay you for your service. This one as well, people pay you for your service as well. How do you make money from here? Well, the way that the dollars get access or get to you through portfolio income, you can either become an employee, right, of the portfolio. Mel and I did that before. We used to be T4 employees on the Canadian side. We've stopped that now. The way we get money from our portfolio in the different countries is through dividends and distributions. Okay, that's how we get it for different tax reasons, legal reasons, all of that. Definitely talk to an accountant or a CPA as to what is best for you. But that's how we do it. And that's how, again, when you're thinking about, well, yeah, if I wanted to do this, how do I actually make money? That is how. And the cool thing is if done properly, you can have some tax-free money owing back to you from the actual portfolio, which means, think about this, think about the compound effect. The real estate can get refinances as you move along. Those are tax-free events. So the portfolio gets tax-free money from the bank because the value of the asset went up, okay? So within here, it's not getting taxed. Then, if that entity, right, whether it's an LLC or a corporation, whatever, depending what country you're in, then gives you money and had money owing to you tax-free, you've now literally just taken money from the portfolio, no tax, given to yourself, no tax, and you're using that money for whatever you end up doing, okay? That is the game changer. Here, you're paying tax, right? You might have a corporation or an LLC, right? Might be an S Corp or a C Corp if you're in the US. It might be just kind of a standard OpCo, an operating company in Canada. So you can still have the advantages of pre-tax dollars, meaning the money comes into the entity, you buy what you got to do, and then what's left over you pay taxes on. This one, you're most likely not incorporated, so you're kind of using after-tax dollars, meaning the government takes their portion and then you get what's left over. And definitely this one is after-tax dollars, right? Think about your paycheck. You have all those line items, right? Like Social Security, government, XYZ, income tax, all of that stuff. So this one, it's a paycheck. They've basically taken everything that they want and you get what's left over, right? This one is the least amount of control that you have. And then whatever you've got, you pay tax on too. So anyway, that's a breakdown of the 4 different types of income. And again, I can't stress it enough. This one is definitely our favorite. Thank you for staying right to the end. Hopefully you liked the video. And if you do, make sure to check out this next one. I'm Dave and I'm wishing you some portfolio income. See you in the next video.